What is up, guys? Dirk here. Just a quick update on the Bitcoin and Ethereum chart as we are seeing a bit of a pullback, and let's try and reassess what that is potentially turning into. So if you haven't subscribed to the channel, subscribe down below, smash the like button. Let's get into it. So we have a 3-day chart here of Bitcoin. You can see Bitcoin is currently 28,175. So it has pulled back a bit. The max we reached was just over 31,000 over here just about a week ago. So now we have to look what is happening. Are we potentially seeing a local top in action that can see more downside, or is this just a pullback before we see more continuation to the upside? So first things first, I think start out with the bigger picture. And in my opinion, this is what I made the video about on the 3-day chart at the beginning of the year. Once we reclaimed that over here in early January, the trend was bullish. We got above it, retested it, and went up. So as long as the price is above the 3-day 50 moving average, which is 22,300-ish at this point in time, the trend is still bullish, which means that there is still $6,000 to the downside that it could even drop without breaking that primary trend. Okay, maximum. Doesn't mean it has to happen, but that is how I'm viewing things. In the same way, you can see over here, as long as the price stayed above, there were pullbacks on the way and there were consolidations on the way. And if we bring out the RSI over here also, you can see I've been talking about this and made a few videos on the way up. We do have, as the price has been going higher, we do have this RSI divergence, and it has consistently just been ignored. We've got the pullback here, but as we're going higher, we still have that RSI divergence. So more often than not, when the divergence eventually plays out, it does warn us of a trend change. But you can see, because this is a 3-day chart, it can take longer. It takes weeks potentially for that divergence to play out. Even here, you see how far the price went up before eventually the divergence ended up playing out. You can see by the time, if we call that the point that it started in January 2021, it basically lasted exactly about 4 months before this whole divergence here played out. And the price went up in a major way because obviously that was well into the tail end of the bull market here. So I don't think that's super comparable in the same way because it's not the same momentum over here, but you can see, just for illustrative purposes, that it can take quite a few weeks, if not a few months, for the divergence to end up playing out. Now, my original thought was, just purely based on this being the high over here, 32,300, that we would hit that. There's also a CME gap at around $35,000. Okay, so that's something to keep in consideration. And for now, while this could still end up dropping lower, even if it does, I mean, the obvious target would be about the middle of the channel, which is about 25,000, which is equal with these highs over here. If we do get that, that's a possibility. So we could obviously get something like this, where it just continues higher, and then we'll have to wait and see. Okay, there's also a chance that it bounces over here if we're looking on the lower time frame and just continues up and hits that before the sell-off. That is also still a possibility. So for now, what I am watching, if we zoom in a little bit more, at this point in time, we are exactly at the Fibonacci golden pocket here of the move from this low of 26.5 to that high at just over 31. So you can see, and you can see over here, there's just a lot of activity right on this golden pocket over here. So we went up over here again. So if we can somehow hold here and bounce, there's a chance we still go up from here to that 32. If we break below here, I mean, we're probably going to take out these lows if this breaks, and potentially even these lows. So I think it's key level right now, about 27.8. If that can hold, we still have a chance at running it back up to 32. And if that breaks, I would say we're looking at 26.5, maybe 25, maybe even 24 is a possibility. Now, if we look on the monthly, there's obviously still 9 days left before we get the monthly candle close, so we can't say anything just yet. I will make a video about this, about the monthly close, on the 1st of May, so make sure to subscribe down below to get that update. And depending on how that's going to look, I think it'll be telling, right? Obviously, if it's going to close like this, it could potentially be a warning sign if it closes around 28.2. But a lot can happen in 9 days. If we do get that upside continuation like I expect, potentially, and we go back up to 32K and it turns into a nice green candle for the month, then we could see that continuation. So I will do an update first of all on Monday with the new weekly close, and then on the 1st with the monthly close, and I think that's going to tell us more about what could lie ahead for the month of May. Now let's take a look at Ethereum, which is currently trading back at $1,930. And the one thing that could potentially be something that's concerning here is if we look at it at this way, right, at this specific way where we took the low to the high and we draw a range there, 50% is the dotted line, then what we got is a deviation above this high, but a drop back into that range. And if this is a correct setup, then that could result in further sell-off and potentially back down to the middle line. What we also have here is, as you can see, we have a bearish divergence over here since this move started in January, right? In the same way as we have it with Bitcoin, you can see on the daily chart, the RSI has made a lower high, while this made a higher high, and while it deviated above this high, but only for a little bit and dropped back into the range. So what we really need to see is we need to see ETH get back above this range and continue higher here. If it doesn't do that, we are at risk of more downside, right? So really what we want to see is we want to see something like this and continuation, and pretty quickly. What we don't want to see is we don't want to really see ETH get a market structure break on the daily, meaning that we don't want to see it go below this level, because if it does that, it would be a break in market structure. So if it goes down here, what we could potentially be seeing is something like that. And that is obviously not something that the bulls want to see. So I think this level is pretty important, about 1820. As long as ETH stays above there, I think the bulls have a chance for a bullish scenario where we could see something like this and hopefully see continuation to the upside. But break below 1820, we get a market structure break, and then we'd be looking for potential downside targets. Also, why this could be bearish, if this is indeed a range setup play out, is that we have the high, we have the low, and usually the rule with the setup is we wait for a sweep of either side and target the opposite direction. Meaning, if this is the range setup in that way, we got the high, we got the low, we got the high. The first sweep was the high, which means that according to the setup, the next target could be the low and a sweep of the low, and that would obviously mean that the whole market is going way lower in the second half of the year. And it is a possibility that we have to consider, because it happened in 2019 also, where in 2019 the markets topped in about June and then bled all the way back down, and finally had that black swan flash crash in March before the halving, before it went up. So we have to consider that as a potential scenario, but only if we get this market structure break and break of key trends again. So for now, I will still hold till the bullish scenario. If we get a break below 1820, I would start to get cautious and start considering a more bearish scenario. And from there, we'll just have to take it, a week at a time or 3 days at a time, see how this continues to play out and how it continues to develop. But I think this is important. We have to stay flexible to both sides. I said we were likely in a bullish trend for multiple months at the beginning of January, okay? And that ended up playing out. Now at this point, we're getting to a more tricky point, because we have gone up here from the June lows, right? That was call it 900. We've gone up more than 2x here on ETH. We've gone up more than 2x on Bitcoin, pretty much 2x. And now we're approaching May, sell in May, we have lunar eclipse. We're approaching a similar length in time towards the halving as in 2019 when the market topped. So we have to consider all of those as possibilities. And then we just have to wait and see how this plays out. So I will make a video on Monday again with the weekly close update, and then the monthly close is going to be very telling, in my opinion, what could lie ahead for the month of May, which kind of being cautious about potentially looking for a sell-off in May, especially around the lunar eclipse. So let's see how this next week or so ends up playing out and what kind of a monthly close we end up getting.